Hello, this is Brian Hofschild, and this video is on my website. I'd like to take a moment to, or not a moment, a few minutes to discuss with you the idea of partnering with me on some long-term real estate investments. Basically, there's two strategies we could use as we approach real estate investing. One is the short-term real estate flip. Let's buy this house, fix it, and sell it, get some money back. Then, you take your money, I take my money, we part ways. The other option would be, let's figure out how can we buy this house, fix it up, get a good quality tenant in here, and hold this property until a time in the future, 5 years from now, for example, when, 10 years possibly, when the real estate market rebounds, and then we sell at a point when the market is higher. Both strategies are good, and honestly, I'm doing about 50-50 right now, a little bit of both. But it really depends on your personality, how comfortable you are with me and our relationship, and what are your goals, but if you're interested in doing long-term real estate investing, I've got a few thoughts that I would like to share with you right now. Number one is, where's your money right now? Maybe you have money in the stock market, maybe you have it in CDs, maybe you have it in cash. I don't know where your money is right now, but wherever your money is, it's at risk. If it's just sitting in the bank, you're running the risk of inflation, devaluing your money, especially with the value of our dollar right now going down. You're running the risk of it just sitting there doing nothing. You're actually losing money every day. If it's in stocks, stocks have traditionally been an excellent investment, and you should be able to get like 8% to 12% return on your investment if you're in the stock market. I'm not so sure today. It's a little bit shaky. Things are uncertain. I would at least suggest considering the option of diversifying your money. Maybe keeping most of it in the stock market if you're comfortable with it there. But if you are open to the idea of taking at least a portion of your money and investing it into real estate, that would probably be a wise move, especially right now at this unique point in history where we are today, with real estate values crashing this fast, this quickly. Eventually they're going to rebound. So now's a great time to jump in. How long is this depressed market going to last? It's an excellent question. Wish I had a crystal ball and I could look into the future and predict this is when the market's going to be at its lowest, this is when it's going to be at its highest. And I honestly, I can guess and speculate. I can educate myself, do a bunch of research, and take educated guesses. But nobody can really know exactly what's going to happen in the future. This is what I can do. I can take a look at where were values a year ago, 2 years ago, 3 years ago. What has real estate traditionally done over the last 50 years, over the last 100 years? Sure, it goes like this. It goes up and down. But over time, real estate goes up in value. It stays constant, usually with inflation. So if inflation's, around 3%, real estate is going to continue to go up, except in unique areas like where there's a lot of demand, not much supply, like New York City, San Francisco. Obviously, those are going to keep going up. But in a market such as Michigan, they tend to be a little more stable and just traditionally incline over time, even though they got the ups and downs. And what is very obvious is right now we are in a downtime. In 2008, when I'm making this video, we are on our way down. I don't believe we've hit the bottom yet. I believe the bottom will be in 2009, possibly in 2010. That's just from the research that I've done. I would suggest you do your own research. But you can take a look at when were these bad mortgages written. Well, the bulk of them are written between 2002 and 2006, over a 5-year period. That's when the banks were loaning money to people with low credit, no credit, zero down, no documentation, for no verification of their income, and they were given adjustable rate mortgages. So you can take a look at the number of these crazy mortgages that were bad mortgages that were written during this 5-year period. And you can take a look at them and you can project into the future when are the interest rates on these loans going to be resetting. And you can bulk them all together because some of them are resetting in 2 years, some of them in 3 years, some of them in 5 years. But most of them are 2-year or 3-year arms. Some of them are 5-year arms. And you can take these numbers and project them forward into the future. And you can see when is the bulk of the mortgage is going to be resetting. And that's probably going to be in 2009. So there we can tell the trend is going to be the highest number of foreclosures in history are going to be dumped on the market in 2009. Some experts predict the bottom of the market will be, in the third quarter of 2009. Possibly, I don't know. But I do know this. The banks are changing the way they loan money today. They're not doing crazy mortgages anymore. They're not loaning money out for zero down, people with bad credit or no credit and no verification of income. The banks have bunkered down, tightened lending restrictions. They screen very carefully who they're loaning money to. So I know this. They're a lot smarter and a lot wiser today than they were 5 years ago. So what's the market going to be like 5 years from now, 5 years from now, or 10 years from now? Are we going to have the same number of foreclosures that are being dumped on the market today? Are we going to have this same number of foreclosures being dumped on the market in 2012 and 2015? And I can fairly certainly say the answer to that question is no. We are in a unique position in history right now to witness a massive number of foreclosures being dumped on the real estate industry because of the lax lending practices from 2002 to 2006. So this creates a very good opportunity for us to jump in, buy real estate at record discount prices. Some houses are selling for 50 cents on the dollar and 40 cents on the dollar, and good quality homes. So might need a little bit of work done to them, but tremendous opportunity right now to buy real estate at a discount. When's the bottom going to hit? Your guess is as good as mine. Maybe we're in the bottom right now. I don't think so. Maybe the bottom will be 2009. Probably. Maybe the bottom will be 2010. Maybe. I do know this. Right here in Port Huron and in the greater Blue Water area, real estate values are going to go up sometime in the future. I don't know exactly when, but Michigan is not going to fall off the face of the planet. Everybody's not going to pack their bags and move down south. A lot of people will, but real estate values are going to come back up. It's just a matter of time. One thing that you should keep in mind is that starting in 2011, the federal government is going to be spending $430 million. It's almost $500 million on the Blue Water Bridge expansion plaza. Now, they did an expansion a while ago. I don't know when it was, 5 years ago or 10 years ago, I forget. And they spent, I think it was somewhere between $40 and $60 million at that time. This one is going to be huge, much bigger than the last one. They're going to be hiring plumbers, electricians, construction workers, landscapers, engineers. There's going to be a lot of people living here during a 5-year period from 2011 to 2015, 2016. Some estimate that 7,000 jobs are going to be created in this area during this 5-year period. Well, guess what? All those people are going to need homes to live in. They're going to need homes to rent or homes to buy, and there's sometime in the future there's going to be a demand for housing again in this area, and that may very well stimulate some growth and apply some positive pressure to the real estate prices in the area here. Or we may have to wait, 10 years or 15 years, who knows. But I know this, that the prices over the last 5 years have been artificially inflated because of the lax lending practices. And the prices that are down right now are artificially low because of the number of foreclosures being dumped on the market, where this is in a unique situation in history. This is not going to happen again. So now's a tremendous time to jump in and buy and hold. If you've got the credit, you've got to have the credit to be able to buy, and you've got to have the ability to hunt for good properties, find them, fix them up right, screen tenants very carefully, deal with evicting tenants, and then obviously changing the house out, cleaning it, etc., finding a new tenant if you have to evict somebody else. So you either need to know how to do that stuff, or you need to partner with somebody whom you trust, who can do that, handle that part of the equation for you. Okay? So that's why I'm making this video. I'm looking for partners who are interested in purchasing real estate for the long term, buying now while prices are low, and selling again possibly 5 years from now, possibly 10 years from now. But I actually built my entire real estate empire, which is not very big. It's only about 20 homes. But I built it all on credit. I didn't have a bunch of cash sitting around in the bank. I was just able to leverage my credit to buy properties, fix them, refinance them, go use the money again to buy the next one. So there's opportunities for you to get involved, even with not contributing a lot of money, but just leveraging your credit. There's opportunities for you to jump in, grab some houses, and make some money. One thing you should be aware of, as I'm considering investing in real estate with partnering with somebody like you in a long-term situation, is that I'm going to make sure that I do everything I possibly can in my power to make sure you are completely comfortable and your money is safe, your investment is protected, and all the documents that we get together and discuss and review are going to be able to be reviewed by your attorney. We can even customize this program where if anybody's going to lose money in the deal, it's going to be me. There's ways you can structure a deal where you are safe and guaranteed, where you can be the person who is holding the deed to the property, and I have an interest in the property on in the equity position that's in the property. You can be the one who's on the title or on the deed, or we can set up a partnership or an LLC where we each have a certain percentage of ownership, and this LLC owns the property. But there's very safe and secure ways that we can enter into partnership where things are clearly defined, expectations are clarified at the very beginning. This is exactly what's going to happen. This is exactly how the money is going to flow. This is exactly what's going to happen when the property sells. This is exactly what's going to happen if somebody wants to exit the partnership. The ways we can deal with all that stuff. But I'm going to strive very, very, to the best of my ability, on the front side, to make sure all these details get hammered out in the very beginning. Expectations are clarified. And that's a lot of problems with partnerships today, is that I guess the expectations are not clarified at the beginning on the front side on paper. If you clearly delineate, these are my responsibilities, this is how I'm going to be paid. This is your responsibilities, this is how you're going to be paid. This is the risk that I'm assuming, this is the risk that you're assuming. And there's ways you can safely enter into partnerships, and people do it all the time. Take a look at corporate America. Corporate America wasn't built because one person went ahead and did a bunch of stuff on his own. It was built because people were smart, they realized that they needed each other, and they came together and formed partnerships to create something that was greater than the individual parts. So that's what I'm excited about. Looking forward to sitting down with you and talking, meeting you face to face, and discussing possibility of venturing into real estate investments for the long term. Thanks for watching. This is Brian Hofschild signing out.